Welcome back, everybody. Tuesday night, Vetted VA Live. And once again, I'm joined by three vetted pros to cover an important topic. This one, not as happy and fun as most of them. Tonight, we are going to talk about the divorce and your mortgage. It's an important topic. Most people, when they think of buying a home, it's getting married, starting a family. We need to have our home base. But unfortunately, sometimes it goes the other direction and we need to unwind a marriage. And when we have real estate, we have mortgages, we have finance. The divorce decree is going to tell us a lot about what happens there. There's some things that you should know up front as you're going through that. There's things that you need to know as you're going through it to make sure you are putting yourself in the best possible position to rebuild your life on the other side of divorce and potentially become a homeowner again, or at least not have some of the attachments or responsibilities of having been a homeowner that now someone else owns that home. So with that, I am joined by Brandy Brickler. Brandy is in Texas, loan officer. Got Jerry Avila, also a loan officer based out of Arizona, can cover multiple states. And then Claudia Morales is a realtor here in Southern California with me. And for all of you guys, I'm going to preempt it. For all of you around the country who are worried about Claudia and I, because you've seen on the news that we've had the storm of the century. It's rained for 3 days. So other parts of the country, I remember when my wife first moved here from Washington, that winter, her dad called and it rained 31 days in a row. So for California, we've had 3 days of rain in a row, and the LA Times has absolutely made it sound like the world is going to end. I actually woke up to a National Weather Service warning about an extreme flash flood warning. And I walked out and I'm like, what are these people talking about? So I know it can vary by area. So if you are somewhere in Southern California, you've been flooded, mudslided, anything bad happened, we are not downplaying your situation. We are just saying our media is a little bit absurd. So welcome to the three of you. So where do we want to start this discussion in terms of a divorce? So Brandy, someone comes to you and they say, hey, Joe and I just aren't getting along. We've owned this home for the last 10 years and we're going to go our separate ways. What are my options? Why don't we take it from the perspective, starting of someone who owns a home with a spouse, soon to be an ex-spouse, and wants to keep that home? Where do you start that conversation?
Well, the first part of the conversation is kind of going to have to start, we definitely want to make sure that we are talking about this before the divorce is final. So that's super important. So while you're in negotiations, you want to be talking about this with your lawyer. If you're trying to do it by yourself, I do suggest that you would have a talk with a legal professional, at least about how you're writing this up in your divorce decree. So that's the first thing. And then secondly, we're going to talk about who is on the mortgage. Are they on the title? Is it whose entitlement is being used? Is it two veterans? Is it one veteran and a civilian? So we're going to have to determine who's on title, who's on mortgage.
So that's a very good point. I would say that is the most important thing to determine. And sort of one additional thing to add in there, and let's just kind of walk through it and spell it out. So if you're watching, I tell people, if you've only bought a home once, if you bought a home 3 times over the last 20 years, you do it every 5, 6, 7 years, you're never going to be an expert in this. There's a lot of moving parts. So let's clarify that. We have people who are on title, who are owners of the property, and sometimes it's only one spouse, sometimes it's both spouses. So that's what Brandy's saying. Let's figure out who is on title, who has an ownership interest in the property. Now we have the loan. The loan is secured by the property, but we can only have one spouse on that loan, or we could have both spouses on the loan. So who owns the home, who is responsible for the loan? And then with VA loans, the last confounding factor is who's the veteran, or are both of them veterans, and whose entitlement did we use? So for you veterans watching, that part is easy. The other part is a little bit confusing. From there, Jerry, where do you take the conversation with most buyers who are approaching you, hopefully, again, as Brandy said, before a divorce, and asking for some advice and guidance on how we structure this?
Well, really, I think it just becomes a little bit more of a trying to determine exactly what route people need to be taking in the first place. So identifying whether or not it's going to be something that where they're amicably coming to an agreement where, hey, okay, if you're going to take this property, understand that these are the circumstances. You as the veteran, and in a certain particular circumstance, you can say, okay, hey, do you have enough entitlement to still purchase another home and just have the spouse assume it? Or, what are our options? what are we going to look at? Are we going to need to refinance into a conventional to remove you off the loan? And does your spouse, current spouse, future ex-spouse, are they going to qualify on their own for the purchase of that property based off of what's remaining, and who gets what money in exchange? So all of that stuff has to be discussed, broken down, understood, and at the end of the day, come to an agreement almost beforehand, because it is something that's very touchy. And once you go in, once you get finalized paperwork, the divorce decree is done. It's really hard to try to make any sort of changes after that, because it has to be amicable and it has to be agreed upon after that too, to modify any of those documents. So it's just going to depend on where that avenue goes. Being somebody who's served with divorce transition professionals in the past, that is something that I will tell you, it comes up and it gets kind of ugly sometimes.
So we have a couple of perspectives of a loan officer and how we start that conversation. So Claudia, I want to get your perspective as a realtor, but before we jump into that, a thing that I always like to ask is what's the ideal outcome? We're only generally talking to one spouse. Two divorcing spouses, no matter how amicable, rarely come in and go, hey, we've decided we're going to get divorced. We're still cool and we like each other, but we're going to work with you together. It's one spouse sitting there. And so I always want to start with, what's the ideal outcome? Have you guys decided? And it's not both spouses going, oh no, I want the house. Sometimes people fight over the house, but there's other times where one spouse is like, I don't want the house. And the other one's like, oh, hell yeah, I want the house. So we have to determine who wants it. Number one, does anyone want it? And then the second piece of it, cool, you want it. What are your options for keeping it? What are the two of you agreeing to? What has to be done? So we'll get into that when we start talking about the financing. So above and beyond all the things that we've talked about so far, Claudia, what are the things that you go through with a client who is considering a divorce and needs some guidance with what to do with getting themselves out of their real estate situations?
I think for my side of it as the realtor, when people come to me because they're in a possible divorce situation, is because they're really considering selling the property. I wouldn't be able to offer them any other options like refinancing or, assumptions, because I'm not a loan officer. So when people come to me and they're homeowners, it's really because they want to sell. So my first question is always like everybody else, where are you in the process? Are you just now starting the discussion? Have you already filed paperwork? Have you already had your first meeting with your attorney? So depending on all of those factors, the way that I guide them is going to be different. I would say a lot of times I've had some of my past clients reach out because they're thinking about it and they want to see how much equity is in the home before they do anything else. So if you're in an area that's maybe high value or homes are very expensive, it might be a little bit harder to keep a home with just one person contributing to the mortgage, or it might not. It really just depends on their situation, how much they owe, what are they looking to get out of it. I know for me on a personal level, when I went through my divorce, my ex-husband is the veteran, and so we discussed all of those things, and we started the process while we were getting divorced. So we didn't agree on the value, that's going to also play into what you talk. So really, this is a negotiation between the people that are on title and the people who have ownership. So one side is going to, if you're selling, one side probably will want to show less value, less money that they have to pay out. And the other side is going to want to show as much value as possible. So if you're not at the point in your proceedings where you've been assigned somebody from the court to do all of these things, you can always go out and get an appraisal yourself. In my case, I did the valuation because it's what I do. And my valuation was different than what he was able to get from another person. So it was, it's a negotiation, just like if you're making an offer on a house that you're going to buy. You're basically negotiating the terms, and everybody wants it to be favorable for themselves. So hopefully you're in an amicable situation, but if not, just discuss what makes the most sense. Is it having, Is it having your entitlement wrapped up in one property and then looking for another one? Or is it just paying out? If you're already at the stage where you've discussed with your attorney, if you have an attorney, what the value is of all of your assets, you might not, whoever wants to buy the other person out might not be able to afford to do it based on the equity of the house. So there's a lot of different factors involved. But my first
And
question is always, do you guys want to sell? And it really does just take one person to sign a listing agreement, but it does take two people to close the transaction. So it's very important to be in agreement.
so let's go through that whole view of selling the home, because realistically, we're in a weird time in that if you go back, the 70s was when we started seeing divorce rates spike. 80s were really high, and by the late 90s they started trending down. And I have a theory that part of this is really since 2008, 2009, the economy has been on an even keel, slightly improving. There's also been sort of social stuff where people are less prone to get divorced. But if we're heading into a period where we've had 15 years of stability, if we have more financial issues, we generally see a spike in divorces. So you had mentioned, Claudia, some really important things there. Both high value real estate markets, but even if you're not in a high value market, if you're in a market that your homes are $300,000, if you've been married for 10 years and owned that home since 2010, you probably bought it for $150,000. So even if you're in an area where you can go buy another home for $250,000, $300,000, there's still $100,000, $200,000 of equity there to talk over or talk through. And Jerry, Brandy, jump in if you guys are seeing similar things or different things in your experience. Like, it's all over the spectrum how people react. I've seen super amicable relationships where one of the spouses is like, hey, I just want a roof over my kid's head, do whatever's right. I was a jerk. I did bad things. I understand why they're leaving me. I just want to leave it as good as possible. I've had situations where both of them hate each other and don't care about the best thing for the asset or the kids. They just want to inflict as much pain. So there's this whole entire spectrum there. But Claudia, you mentioned something very important is there's multiple layers to it. First, we have to get a valuation, and the court can dictate that. Oftentimes, like what have you guys seen? I've seen a divorce situation where they said, hey, both of you go out and get your own valuation, come back in, and we're going to compare and contrast and see how close they are, and the judge helps them come to a number. I've seen one where one spouse goes out, gets an appraisal, and comes back and says, this is the number, or their realtor gives them the number. And I've seen the other spouse go, oh, cool, I'm fine with that. So a lot of it really comes down to how much debate and animosity there is between whom. And I guess two people could hate each other, but still agree on what the home is worth. But it's an interesting situation really going through that. Brandy, is that similar to what you've seen when you have clients going through this?
I was going to jump in and just say that one of the confusing parts is that there's so many different options of what you can do in the middle of a divorce. And so some of that is, yes, you want to find out what the value is, all that good stuff, but we need to talk about whether we're going to refinance, whether you're going to sell the property, or whether or not someone's going to assume the mortgage. That's a hot topic this year, the assumption, and figuring out how we can use that. But finding out from your mortgage professional exactly what your options are and allowing them to work the numbers with you to find out financially what decisions you can make with what equity you have. Can one spouse afford it? Can they not afford it? Do you have to refinance into a conventional loan? Is someone going to leave some remaining entitlement behind and assume the loan? So once we're able to work out those numbers with you, we can tell you what your options are. And I think one of the next things that we talk about is like, what is someone's income? If we have like an active duty or a veteran and a civilian spouse who need to split, and this civilian spouse has been a stay-at-home mom for 15 or 20 years, what income are we going to use to qualify them off to keep the house if that's what they wanted to do? We often see that situation a lot where, the spouse will want to keep it for the children. And sometimes, in the amicable divorces, the veteran will want that, but we have to be able to make sure that assuming the mortgage still means that you need to qualify with the current servicer, so that's just an assumption process.
there's a million directions. So in terms of keeping the property, there truly are. Like when we started mapping this out, I go, oh, that's a great show topic. It's coming up more often. We should go through this. And then trying to do the outline today, I was like, there's more permutations of what's possible here than I ever would have thought. So
if we drew a square, it's like put all the combinations together. Like it's a million different combinations. Yeah, but people sometimes don't know that these options are available to them.
Well, let's look. We do have a comment here, and always like to remind you guys, our number one purpose here is to answer your questions. Yes, we're discussing a topic, and we can talk without any input from you guys, but we do prefer to actually answer questions. So if you're watching, if you're in the Vetted VA group, if you're out on YouTube, if you come across it, however, if you have a mortgage or real estate related question, VA specific, non-VA specific, we are here to answer your questions. Throw it up in the chat. But we had a comment here, just said, tell your agent if you're going through a divorce, don't hide it.
Tell your mortgage professional too, because I've had clients who are a little shady and they're trying to buy without telling me that they're not divorced yet.
or not even telling you that they're going to. There's like, well, hey, you know, Joe and I aren't getting along so well, but we're going to try something different. I might do this. Or, hey, Joe got laid off. I'm going to try and do this loan, when the reality is Joe moved to Tennessee and he's not around anymore. It really is crazy that people, there's stuff happens in life. So you should never, when you're dealing with your professional advisors, feel like you can't share that with them.
Especially I am not a community property state.
Yes. You know what I'm saying? We're not going to be running around telling your business, even if we may be friends. Like I have situations where friends will go get a loan from us. I wanted to get a loan from you, but we're going through the divorce. Like, listen, when you walk in the office door, we're not friends anymore. This is a professional relationship where what you say stays here. We've talked that we're heading into tax season. So for like self-employed people, consult with us before you go see your CPA. Make sure we're not doing anything crazy that keeps you from qualifying. The divorce is almost that on steroids, because we have issues of alimony. We have issues of child support. As Brandy pointed out, we may have a spouse who wasn't working. Like there's timelines on this that say, hey, cool, you're getting $10,000 a month child support for each of your kids. Your twin kids are 16. That's not going to do me a lot of good when they're going to be 18 in 2 years and you don't get anything. So there's so many details that we can all talk through and lay out. And get on the same page with that. So in terms of, before we kind of put to bed the idea of selling, we've gone through most of it, but Claudia, what are some of the things that can happen? Let's say you have a client and husband comes to you, hey, I'm getting a divorce, want to list the house. It's not necessarily his decision. How does a realtor get selected in the divorce situation, and who ultimately gets to make that decision, or what are some of the ways that decision can get made in the divorce process?
So ideally, you want both parties to agree. There have been situations that I've had where I didn't get a chance to talk to the other party. So we went ahead and listed it with, subject to the other person agreeing. Sometimes it's gotten to the point where the court has to be involved and they assign a neutral party to list it. But most times people are, when it comes to money, I feel like people are a lot more cooperative. And so maybe initially when they have the conversation, they're not in agreement. But then once the professional steps in and says, hey, I'm sorry you're going through this, but this is how much money you can each make from the sale of your home, it tends to change a lot of people's attitude, and they become a little bit more cooperative.
And at the end of the day, it's whatever the two in the couple and the court agree to. I had one last year that I had never seen in 20 something years of doing this. I had a buyer buying a home and there were two listing agents. And I'm like, why do we have two listing agents? It was a divorce.
So here in California,
it was a divorce and they hated each other. So tell us how that works.
So in California, I mean, in our listing agreements, you do just need to have one party sign to list it. But once you enter escrow and you're getting ready to close, you do need to have both parties agree to sell. Once the house is listed with one broker, you really, as a co-op or as a different broker, you're not allowed to take that listing because it's already under contract as a listing with an agent.
And in this specific situation, as I said, these people hated each other, could agree on nothing. And their sort of compromise with the court was, you pick your agent, and they're going to co-list the property. They
Yeah,
each
yes,
get half the commission. And it was the weirdest thing, because the agents got together and said, okay, this is weird, but here's the 25,000 things that need to be done in a transaction. You do this half, I'll do this half. We'll communicate with each of our selling parties. So it was like we doubled the everyone on the selling side of that transaction. So nothing's weird. That was unique. Now, I say nothing's weird in the sense that whatever everyone agrees to, and that makes them feel comfortable that they're going to have their needs taken care of. So from that perspective, it's almost easier for us to talk through what are all the things you need to go through in a sale. On someone keeping the property, we're going to open up a whole new can of worms. So Jerry, we haven't let you talk much, but now we're just going to throw all the questions at you, and you have to explain everything of what can happen. So let's start with a very common situation. So let's go back to that situation where someone bought in Iowa, $200,000, zero down. They've paid it down to $170,000 over the last 10 years, and it's now worth $300,000. They did an Earl in the middle of COVID. It's at 1.875, and no one wants to let that go. So they want to keep the house. They want to keep the loan in place. What do you do, Jerry? Where do you start advising them? What are the decisions that have to be made?
So this is where it gets really tough, right? When you have like those dynamics of it almost being like the perfect scenario for one party versus the other. Sure, sometimes selling the property is the better bet. Do they have the funds to be able to cover that difference if they're dividing the proceeds? What's going to be the situation in regards to how that like can they just take over doing the assumption of the loan? If they are, then at that point it's okay. Now, are they able to also show proof that they can actually manage, and as long as they were part of the original loan, right? So as long as they're part of the original loan, then they can show that they actually had the financial ability to pay that mortgage themselves, then that can all work out. So, I mean, there's just so many different directions that it can go in. And, ultimately you can do a spousal release. There's, like I said, the whole thing of depending on whether or not one of them is a veteran or not, then, obviously swapping entitlement, things of that sort have to come into play. And so it just really depends on the specifics of that particular scenario. And just like I tell everybody, your scenario is identical or only identical to you, right? I mean, it will only be to you. It's like a thumbprint. It's always different. There's always a wrinkle that's off from somebody else's. And just because X over here, divorced 2 years ago, and Y over there divorced, today, doesn't mean that their scenario is identical to yours. So the same way it's going to work out with, okay, what are the dynamics? What's the value? What are we looking at potentially having to split? Does one have the ability to come out with the cash to buy out that piece? All of these things are going to go ahead and come in as just an actual requirement of that conversation, and determine, okay, what are our avenues that we can go in? There is the assumption without the substitution of entitlement in the spouse's case where the spouse is not a veteran. And in those circumstances, it gets even more tricky, because now you have to take into account, okay, can this veteran potentially allow for that entitlement to be tied up to that property and still be able to go out and afford to buy another one? Now, based off of the proceeds that they're going to get on from the ex-spouse, can they go ahead and now utilize that to buy the other property and it be offset in a sense? And ultimately, again, it just becomes a scenario where each individual circumstance will have to, kind of determine which path we're taking.
I'm trying to think through this and say, what is the simplest way to walk through this so that someone watching can go, unfortunately, I'm in a situation where we think we're headed for divorce. What do these options look like? Let's just start with that idea of keeping the current loan in place, because most people are going to want to do that. So unless you bought 6 months ago, the property is heavily appreciated. So there has to be an agreement between the two of you, or the two of you in the court, of this is what the property is worth, and this is how we're going to split that equity. So if we want to keep the underlying loan, the person keeping the loan needs to be able to pay out the equity, so they have it in their pocket. They can borrow it. They can get a gift from a family member. It doesn't matter where it comes from, other than if they need to do a second mortgage, which again, that situation we're talking about, 170 owed, 300, there's 130,000, however you decide to split it. Let's say there's a $60,000 buyout. You can get a second mortgage. You can get it from a family member in the form of a gift. You can pull it out of a retirement account, but the retirement account is probably also subject to that divorce decree. So all of those things are there. We have the option, if we're talking about veteran or non-veteran, in that situation, the person that wants to keep the property, a cash out refinance. We have a question here. Sandra asked the question, does VA offer cash out now if they need to refinance and pay out the other spouse half the equity, they go up to 100%? Well, if we're only splitting out half the equity, they shouldn't have to go to 100%. They could if they wanted to and they qualify, but that is absolutely an option. But for most folks sitting on a VA loan older than 18 months, it's at a significantly lower interest rate. So they're going to probably want to try to hold on to that. So we can leave the loan in place. We can replace it with a new VA loan. We can replace it with any other type of finance.
Credit. Yeah, you can ultimately do home equity lines of credit, a second on the property, things of that sort will kind of open themselves up depending on the circumstance. So it just really, like I said, it always varies.
What's important about that is that when whoever's holding the loan or who's going to keep the house, and let's just say there's a piece of equity that they need to pay out to the other spouse. So let's just say that they need to get a loan on that, like a home equity line of credit or a HE loan or a second mortgage, whatever. Let's just say it's $100,000 and the payment's $600, right? That $600 needs to be added into what the current mortgage is, and they have to be able to afford that. And, sometimes one or both spouses are not being left financially in a situation to take on more debt in the middle of a divorce, right? So that's one of the reasons why we usually will see people dispose of the property and split the proceeds rather than one person stay, keep the house, and pay out the other with equity. That's less of an option just because, interest rates were so low, payments were so low. Doing a cash out would mean they refinance the entire loan and that interest rate goes up, meaning the payment goes up, and the same for a refinance, right? So whenever we're doing that, we need to qualify that person that's hanging back and keeping the home. The option that is pretty available right now or more common right now is an assumption. And if a veteran is leaving their assumption, their mortgage or their certificate of eligibility behind with their previous spouse to take, there is still a portion that's left over of their entitlement that maybe they can use to purchase again. The important thing for them to remember is that they still have like financial liability on that house until the old spouse actually refinances out of it, So it's like you can use some of your eligibility to leave behind, but you're still tied to it financially on the mortgage.
Well, let's talk to that because you had mentioned the assumption. So let's assume, because in divorce situations, there are people that absolutely do want to do the right thing, especially when there's kids involved, and put a roof over their family, at least until the kids become adults. So with the opportunity for that assumption, let's just say, for sake of sake, husband's a veteran, wife is a non-veteran. Wife can qualify or at least take over that loan. So she could do an assumption and release the veteran from liability, but she's not a veteran. She can't substitute her liability. So what the veteran is giving up in that situation is the ability to have their full entitlement. As you mentioned, we've done an episode before on secondary entitlement, and still possibly, depending on how much of your entitlement is used, be able to buy. Maybe you need a down payment, maybe you don't. So with the assumption, you can be released from the financial liability, but you are giving something up. And that's unique to the VA loan program, because if we're talking, you have a conventional loan, you have an FHA loan on there. I guess a spouse could assume an FHA, but on a conventional, you're not going to be able to assume that. And what people are afraid of in a divorce is, I want to leave my wife and kids in the house because that's best for them, for my kids, but it's not best for me because I still have this responsibility out there. So Brandy, maybe explain also the difference between if my spouse is awarded the property in the divorce, but they don't have to pay off the loan and they haven't paid off the loan, what it means that I have financial responsibility, but also at the same time, we don't have to count that debt against me if I go to buy another property. Because I think that's an important distinction there. And hopefully we're not getting kind of into too many gray areas where people don't understand the difference between being absolved of the legal responsibility of the payment versus otherwise.
So I think I can speak to this like with my own personal experience, actually. So in my divorce, I mean, I am a veteran. I can assume and substitute my entitlement for. However, before that was happening, my spouse was buying another property, right? And so when he's purchasing that property, since we are still tied together from this mortgage, when they pull credit on him, then they're going to see that he has a mortgage, right? And so he has enough remaining entitlement. He can't afford another mortgage. We just have to show that I had to provide documentation that I'm making that liability payment for him to get qualified for that mortgage, right? So he can still have entitlement here and go purchase another with his remaining entitlement. But it requires some cooperation between both parties, to let the other mortgage company know that you are the one who's responsible. You'll give them the divorce decree. You'll show 12 months of payments. You'll, give all the documentation that they need so they can go ahead and purchase.
I think that's a good pivot, because a lot of what we've talked about up to this point is with somewhat limited resources, and we don't know who can qualify. We have to get that equity out of the property. I had a situation last year, husband and wife selling a $2.3 million house. They had like $2 million in cash that they had to split. And so the divorce wasn't final. And both of them were like, we're 100% getting divorced. We both we don't want to rent. So we both want to own a home. We have a business that we're both still on payroll for the business. So Jerry, what does that look like? What are some of the implications or the things that you as a lender need to be aware of when you have people who are going through a divorce, but not yet divorced and would like to jump ahead and buy that next house?
So that gets really mucky, to be honest with you, just because at the end of the day, what we have to then take into account is, one, they are still married. So legally, if one buys, let's just assume they've already sold off the property that they own and they both want to buy a property. Well, technically speaking, they're still going to be tied into having to sign with each other. And so if they're not amicable, that they will not be able to sign that the grant deed, basically signing off. And so ultimately there's going to have to be different agreements in place. Everything's going to have to be in writing. Hopefully they'll have a separation agreement at least that will dictate those terms, and will kind of be able to guide you in that direction. But when it comes down to the financial responsibility, part of it is okay, can this person actually afford still to purchase with the whatever amount that they received out of their distribution from the sale, to utilize that to purchase. Now also, do they have the income that will show currently, or do they need to wait until they file their tax returns if they own their own business? Because now, do they have a ton of write-offs from the previous year that now they're going to need to find a way to not write off as much in order to be able to qualify with their income that they have? If not, now we have to look at alternative products like, bank statement loan or things of that sort to try to help them qualify for that home purchase. So it really, like I said, it really mucks the water. You really start to get into just a lot of diverse options of what can come into play. A conventional loan may still be a fit, may not be a fit. Knowing if we are in a community property state, an FHA loan is still going to require you to run the spouse's credit. Let's just say the spouse really ruined their credit during the divorce process. Guess what? Now that affects you on your purchase. So you may have to wait until after the divorce is finalized in order to separate those two. And so those are, like I said, some of those obstacles that we run into, that we have to kind of really, ask the right questions, dive deeper into the conversation when we're talking about the divorce process and who's going to be responsible for what, and then still can this person still qualify for what they want to do after the fact. Obviously, nobody, I can't say nobody, but a lot of people don't want to rent after they've already owned. But sometimes it's kind of the easiest, most stable way to get out of that scenario and then eventually transition over to to a purchase again once they've gotten all the things, like all their ducks in a row in a sense.
You're 100% correct that it is much, much easier. And I told them that if we wait till the divorce is final, this is going to be way, way easier. And the divorce was supposed to be final last May. So shocker here. You guys will be stunned to know that we are still not final. And they've both been in their homes 9 months now, and we still don't have the divorce final. So it was a unique situation in that very financially secure and able to do some things that other folks wouldn't. They were not veterans, but FHA financing would have never been an option because we can do with a conventional loan, we can do an interspousal deed. You have your debt, you have your debt. I don't have to count them when we have a community property state and we have to count debt against the others.
I've had spouses reconcile during the process. So again, you just never know until that's finalized. You really don't know what's gonna be around the next turn. And so again, I've had spouses disappear off the face of the earth, and then you have to go through the court process and make sure that the court now deems that they're
That's important to talk about, actually. That's really important to
it
talk about.
happened to a veteran that I was working with 2 years ago, and it just blew my mind. I'm like, what do you mean they can't find the guy? Like skip trace, nothing, like nothing worked, and he never presented himself to court. So eventually the court finalized it, said
that's super important.
But it took forever. It took a year for her to win the refi, to then all of a sudden be like, you know what, I sold the property and now I'm buying. So then it worked out, but it was just like mind blowing.
No, and it's not all that uncommon, especially for us here in Southern California. And I would say Arizona, Texas, New Mexico, we have a lot of U.S. citizens with deep ties to Mexico. I've had 3 or 4 situations where we have someone on title that we're like, where are they? I don't know. They went back to Mexico like 10 years ago. I haven't heard from them. Like, what? They could be dead. I don't know. They went back to live with their family and no one's heard from them. So it's a giant can of worms that can be problematic for us. And it's more common than people think with people with deep ties to other countries, whether it's Canada, whatever. We've got a big continent here and pretty big neighboring countries. With that, I think the big picture view here, there are so many permutations of the direction things can go. Who wants to keep a house? Their finances, what the other side is friendly, not friendly, what they're willing to agree to, how much the home is appreciated. We always talk here, get with an expert on the real estate side, get with an expert on the mortgage side, because even in the context of this conversation where we're trying to cover all of the options of things that can happen, it's not possible. It gets much easier when we're sitting down with you and you say, hey, can you tell me, I'd like to keep the house. Can we go through the numbers, see if I can afford it? Okay, cool. Looks like you can afford it. All right. Now we've just narrowed down all of the other noise that we can ignore. But if someone hasn't done this for a while and doesn't know all of the things that we've talked about here to think through, you can get suboptimal advice in terms of, hey, here's how I make it work. It may not be the best way. What I can say is in the divorce situation, I wanted to say earlier, there's no wrong way. There actually is. There's 1,000 wrong ways, but there's also 100 right ways. There's two humans involved. There's sometimes little humans involved. Whatever you guys agree to and the court will sign off on, that's what's right for you. But in this context, in terms of your real estate and your mortgage, get your pros involved and have them show you the different paths to get where you want to go. From that perspective, I don't know, without going into even more rare and arcane situations, there's a whole lot more to cover here tonight, but I always like to wrap up and give everyone a last chance and a last thought of what you would like someone to know about tonight's topic. So if you have a client going through divorce, what would you like your client to know? What is your best advice? So Jerry, we're gonna start with you. We're gonna let the ladies get the last word tonight.
All good, brother. So, I think just being open and honest. I think the more you're willing to actually share with your mortgage professional, the more they're going to be able to accomplish with a lot less time. Unfortunately, the fact is that just too many people hide a lot of what they're doing. They'll hide a lot about the past and things of that sort. And so it only makes things that much more complicated if you're not open and honest. So just be very transparent about everything that's going on. If it's a separation, it's a separation, not a divorce yet. So will the spouse be willing to sign off? Like you got to know all these details, because at the end of it, if that spouse is unwilling to sign these things, like for me, I know I will tell you, my job is to tell my team, hey, go get these documents signed off by the spouse now, so that way by the time we go to close, we don't have to worry about this anymore. Because at the end of the day, I know it's come back to haunt us before. I don't want to do it again. So if I can kind of get around those little corners ahead of schedule, then hey, that's great. Then we've just avoided a hurdle. And so a lot of times it's really going to come down to the open and honesty between both parties and their willingness to work with you as a professional. And in the same goes for our real estate professionals. The more they understand the circumstance, the better equipped they're going to be about getting the job done. So at the end of the day, just like I said, be open and honest.
Perfect. Claudia, what are your thoughts?
I agree with Jerry. Be open and honest, be cooperative, look at the big picture. This is just a setback right now, but don't let it keep you from moving forward into whatever, the new chapter is going to be. But this is not really about divorce, and it's not spouses, but there is an increase of non-married people cohabitating together. And I just want to throw it out there. If you're in a long-term relationship and you bought a home with your VA loan, just be careful about putting people on title that you're not married to. When you're married, there's different protections. When you're not married, it's very difficult to do anything with the property when you have a non-cooperating partner. So,
You just gave us a whole nother show topic. We got a whole nother 40 minutes on that. I hadn't even thought about it, but you're 100% correct.
I will tell you a story about a veteran who bought a home and a few months later put his girlfriend or fiance on title. And 5 years later, things just didn't work out. She stayed in the house. She refused to make the mortgage payments. Notice of default is filed. And just to try to get it to sell was very, very difficult. And that's why I said it takes one person to list, two people to sell. So if you're going to put somebody on your title, just make sure that you're married to them ideally, or that you have some kind of instrument in place, because once you have people on title, it's hard to take them off. You can give the position on title easily. You can add people on title, but to take them off title is difficult, and they have to agree to be taken off. So
it's crazy.
Yeah. And then
truly an entire show topic in and of itself of just what that means of being on title and also possibly liable for the loan or not.
Yeah. And this was two veterans, and one entitlement at stake, and very bad terms. So I just wanted to throw that out there. Don't put people on title that you are not married to.
Like the credit implications there, it's like,
yeah.
And it's almost, again, this is a whole nother show idea, but it's almost something along the lines of you need some type of legal agreement if you're going to do it, because the courts do handle a divorce. Husband and wife, there's some law that says how things will work out. It's not nearly as clear when it's two single people, and you almost need an agreement if you're going to own a home with someone else. And it is definitely a complicating factor when you have an entitlement, generally one entitlement involved there.
Yeah. And if you're at the mercy of that person who's upset about the breakup, they don't have anything to lose because they weren't financially responsible because they're not on the loan, but they get the benefits because they're on title. So maybe we should save all of that for.
I think I'm going to go to my list, because we're taking a few weeks off. We'll be back for another rotation of 8 weeks. That might be the one we start.
I think that might touch on the subject to actual conversation too, because that would actually fall into place with that.
And a lot of people say that, if you make any changes to title or if you add people after the fact, that the mortgage company might call it due. They're really not going to do that. I mean, this situation that I'm referencing, they called the mortgage company and asked them to call it due. And they're just like, we don't do that. But it's in the grant deed that they do. It's in the loan documents that they will, but they don't. So just be careful.
Brandy, what are your closing thoughts for tonight?
Well, I guess my closing thoughts are this is the biggest asset that two people generally purchase together. And like during the course of a divorce, and you have the ability to both walk away kind of unscathed, or you have the option to destroy each other by, ripping apart the amounts of equity or money or things like that. And so taking this and using it as a tool to like get back at a spouse is really just going to destroy both people's credit in this situation. So ideally that you would be working with professionals to help you come to an agreement. And then that's legal professionals. And then your mortgage professionals to be working out numbers to make sure that you aren't making decisions in the divorce decree that you actually can't make happen financially once it's done. And that would be, for example, not having enough income, alimony, child support, or whatever to qualify you to keep that home if that's the spouse that's keeping it. So again, you're going to take a hit on most things during your divorce with credit. So that's important to also take into account. I mean, most people's credit scores will drop, during a divorce because you have to separate some liabilities and things like that. And for that reason, you need to be talking with a professional to go through your options, to give you what it looks like, and then make sure that you're not destroying yourself financially or credit-wise by, using the VA loan or, this part as a tool to get back at the other person. So
I'm going to piggyback kind of a different angle on things that you guys said. Be cool going through this process. I have seen in divorces, people so focused on winning the battle that they end up losing the war. They're so intent on hurting the other person that they end up hurting themselves. And some of them have been like, I'm cool with that. I'm cool that I hurt myself. I wanted to hurt them so bad that if I get blown up too, I'm cool with that. But most people aren't that way. So be as cool as possible. Think, what is my long-term objective? Not what will make me happiest today, next week, next month when I'm inflicting misery on this person. So just be as cool as possible. The second piece, going back to what Jerry said and being open, honest, and clear, do not ever feel any shame. We have heard the craziest things ever. Literally nothing can shock me. I heard a shocking story from a client about 3 or 4 weeks ago, and I could literally tell them, I go, it's not in the top 10. Like I can commiserate with you. It's a weird and wild thing you're going through, but yeah, it's not a judgment call. It's after a while, we have seen so much of this. It's sort of like an emergency room doctor. You come in with your brain hanging out. It's not going to gross them out. They're like, I see this stuff every night. Let me scoop it up and put it back in for you. That's just what we do. I'm not concerned with what your pay stub says, your W-2, how high or how low your credit score is, your bank balance. It's what do you want? What are your options and how do we optimally get you there? So don't ever feel ashamed of what you're going through and let that keep you from communicating with your professionals.
You know what we didn't discuss at all, and I feel like I have to say it before we leave, is walking away from your mortgage should not be an option. Like that should not be an option. So I do have like some friends, a child who was a veteran and just, separated from his fiance and was like, I don't know what to do. I'm going to leave the house and just let the bank take it back. So that's not an option. That really just destroys both people's credit. And so just remember that should not be the option that you're seeking first.
And just remember, I think we've all been through something over here. So it's like, trust me, your scenario, your situation is not going to be out of this world different than half the stuff we've probably seen or heard already.
For sure.
And some of you may be saying, well, Brandy, why would you talk about that? No one's going to walk away. The very first purchase mortgage I did in 1996 was for a young couple. They were engaged. They were getting married in July. We closed in June. They were going to move into the house. Never got to the altar. Never made a payment. A first payment default. The home was in Anaheim, California. If I remember correctly, it was $127,000. They both walked away. Almost either one of them could have made that payment. And 5 years later, in 2001, 2002, that was a $275,000 house. So it felt like the right decision to them at the time. They're both like, hey, I'm going through trauma. I don't have my fiance around anymore, and I can't afford this. I can't make it through. And if either one of them had just sucked it up, threw a couple of roommates in the house, they would have been in a better situation. But bigger picture, I think you guys can see, not only have we all been individually through things, we see a lot of stuff. We are professionals. It doesn't leave our offices, and we're here to help you through that stuff and move on to a better tomorrow. So I appreciate the three of you being here, going through a interesting and difficult topic, and hopefully sharing some information that those of you who may be going through a divorce situation can benefit from at home. So the most important thing is find yourself trusted professionals that have been through this, have done this for a while, know the guidelines, know everything to look out for, and you can chart a path through it. So again, we're going to be off for the next 4 weeks. So I think that puts us right into March. We will be back for the spring buying season, a whole new set of topics to go through. If there's anything you want us to cover, throw it up in the comments here, and we'll go through it, because we're always looking for new and interesting things that you guys want to see. And that March, April, May season is going to be a busy one this year, with rates a little more favorable and the market a little more favorable than it has been the last year or so. So again, thank you. we're all crossing our fingers for that. I might have just jinxed us. I apologize, everyone. All right, guys. Thanks for joining us. Appreciate it.